Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report from Monday, September 11th, 2023. Before I click through all the charts, as usual, just want to encourage you to please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple Report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for 20% swings or better on those individual stock picks. Recent stock picks have been IBM, Netflix, etc. Just over the last week or two. We offer a 5-day free trial up front. So as you sign up for wickedstocks.com, you've got 5 days to check it out and cancel without having your card be transacted. So, it's worth the 5 days to check out, look at things. If you like what you see, you can continue, obviously, and we would certainly welcome that. And I think that is the likelihood based on what we see when people start their subscriptions. Anyway, let's check out the charts. I will walk through the long-term charts, the weekly charts, and into the day itself. Long-term buy signal remains intact above 168.16 this week. We may see this region over the next week or two. It is roughly anticipated following the big sell-off last week. Not roughly anticipated, it is anticipated. But when I say roughly anticipated, that is such a big area of support that we may fall short of it, which is often the case. I'm not saying we will, but we may. And so just know that 168.16, if tested, can absorb selling, through next year, really, because above which the longer-term outlook, I think, still calls for this 226.70 long-term channel top. Not to say that is an objective right now is laughable if your time horizon is near to midterm. But in terms of the way the chart sets up as we move into next year, we just need a meaningful buy signal, and then it becomes in play in the months ahead. And that buy signal right now would be above 190.53, which I have as a weekly resistance area. I don't think we're going to see this area this week. We may well see it over the next 2 to 3 weeks, but 190.53 can contain weekly buying pressures, and we may actually bump this up to a 4-star multi-week resistance area. In other words, able to contain buying safe for a month, and from there we could fall back into the lower 170s or mid 170s once testing it. We'll see where this channel structure is at that time, but we could trade inside this zone for the next month or two perhaps. But once again, closing above 190.53 would, I think, mark a good low through the rest of the year. The following month or two then likely to reach this 209.01 new channel top, which is based in part on last Thursday's low, where we could actually top out on a monthly, possibly quarterly basis. And by the time we reach 209.01, if we do over the next several months, let's say, we're not all that far off the objective. 209 is about here on the chart. And so we're not all that far off from reaching 226.70 anyway. And in fact, that 209 area, I could actually draw it on this weekly chart. It comes off these lows, it comes off this high, and it will, as we move into probably the turn of the year, converge with 226.70 anyway. So that is the big picture in a nutshell. Now let's kind of work the day itself. I'm going to jump around here a little bit, show you that 181.76 is still able to contain session activity, session highs, daily highs. 178.21 has been reduced to a minor point only in favor of 177.67. 177.67, I'll talk about that actually. I'll talk about that in this chart here. Where are you? Yeah. 177.67. So if we're doing a downside Fibonacci's over the last 2 days, 177.67 is a downside 3/8. And what I like about 177.67 is it's right in line, really. You've got Friday's low of 177.79, and you've got the settlement price coming off that low from Thursday of 177.56. And the 3/8 downside really splits the difference. So 177.67 intraday support, above which 179.82 in reach. 179.82 we pushed through actually last Friday but it is a 3/8 upside retracement over the last week of trade, these wide extremes, 179.82. So those are our intraday support and resistance levels. Day traders can make good use of 177.67 and 179.82. And if we violate either point, we then indicate the next meaningful session containment level. So if we break 177.67 today, 176.10 is likely. That is a downside 5/8 Fibonacci over the last couple of days, able to contain session weakness in the midst of what could still be a rout to the downside following that big sell-off last week. That was, and I don't want to backtrack, but there was a long-term speed line that came off that July high, mid-term speed line that we closed below in the 186 handle, as I recall, that set up an upper 160s objective. That is still the susceptibility to continuing south. Once again, I'm not sure if we're going to fall all the way into the upper 160s, but if we do, just know that there's a lot going on down here. 169.94 is a downside 3/8 Fibonacci long term off the, I can go here. Off the January low against the July high, 169.94 is a downside 3/8 Fibonacci. 168.16 is that long-term channel top on the weekly chart that I can show again right here. And 167.74 is a new descending channel bottom based in part on the high that was put out earlier last week. So the upper 160s, significant zone of long-term support, able to absorb selling through the rest of the year. And I don't know if we're going to see it or not, but I will go back to this chart and show you that if we close today below 176.10, the 5/8 downside Fibonacci over the last 2 days alone, 171.96 is likely within a day or two. So Tuesday, Wednesday, we test this 171.96, where we could double bottom through the rest of the week. But I'm keeping it light down there as a session containment level only. Because I really want to still make room for the upper 160s. That if tested, 167.74 up to 169.94, able to absorb selling through the rest of the year. If we fall into the upper 160s this week, it does represent a solid buy opportunity. So if you're, and I'm just going to kind of cover the 3 to 5 week time horizon. We'll be providing these levels to you. But if we dip into the upper 160s this week, we will show you then this variation of this channel top, which will be a descending channel top, and it'll probably come off of this high, but I suspect it'll still be in the low 190s, because if we break to a new low, let's say in the upper 160s, it's a trend line off of here, projected off of here, it'll still be in the low 190s. So if we dip into the upper 160s this week, you may consider reaching for 190 out of the money calls that don't expire for, I would go 3 months out on that. I think it'll take more like 3 weeks to reach, but we could get caught up into a consolidated framework that could last for several weeks. So I would go with an expiration that's 3 months out in the 190 calls. If we dip into, the upper 160s this week, you could also consider reaching for, if you're a long-term position trader, you could buy the stock itself, of course, and hold out for the 220s and climbing, or you may just reach for 230, 240, 250 out of the money calls that don't expire for at least. I would go a year out. I don't think it would take a year, but that would be the big picture idea. So I've kind of covered the day, I think, pretty well. Let me go back to the upside before I finish up here. 179.82 is a 3/8 upside. We pushed through it a bit last Friday. If we push through 179.82 again today, Monday, we should test this 181.76 level. 50% upside retracement over the last week, well suited to contain daily buying pressures. It does close a gap as well, and if settled above, should mark a good low for the week. And I think if we close above 181.76, we test 187.61 by Friday's close, and by the end of next week, we actually reach this formation at 190.53. So closing today above 181.76. I have it as an up pivot. would indicate by the end of next week 190.53. And that would be a nice swing trade to the upside. 1 to 2 week swing trade turns positive. 3 to 5 day swing trade turns positive above 180.176, expecting 190.53 where profits can be taken. And 3 to 5 week swing traders may consider going short back into the upper 160s perhaps or lower 170s. And we'll be covering that closely at the time. Once again, to the downside, if we happen to close today below 176.10, the 1 to 2, 3 to 5 day swing trade stays negative, stays short. You may be short already below 181.76, but I'm putting 176.10 out there as a level that may well contain session activity because of the slight reduction in volatility that did occur last Friday. I think that's reasonable, but don't be surprised to see a settlement below 176.10, then anticipating 171.96 within a day or two. It is stair step on the way down, but I am allowing for the upper 160s over the next week or two. And certainly if we close below 171.96 any day this week, we're just a few days away from testing the still targeted, and I say that loosely, upper 160s. And I say it loosely because it's such a meaningful long-term support area. I think there'll be plenty of bottom pickers on the way down that may actually prevent its outright testing. I'm going to leave it at that for Monday's Apple Report. I'll be back again tomorrow with Tuesdays. Please click like, share, subscribe, and check out wickedstocks.com. You have a great day.